Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and welcome to the start of this week, and likely to be quite an interesting movement in terms of how Friday was left, starting with the Australian dollar. Well, last week the RBA left interest rates unchanged at a record low of 1.5%. with only minor changes to its economic forecast in the quarterly policy statement released on Friday, did however mention it was growing confidence in its expectations that inflation will rise over time. The tone from the statement is consistent with remarks made earlier this week by the last week, should I say, that the RBA Governor Phil Lowe has harped on that the central bank remain reluctant to lower interest rates further, but equally immediate interest rates increase are unlikely too. So looking at the market, my objective for last week was at 73.60.70, and we did print a low on Friday of 73.66, so the downside target has been achieved. For the start of this week, technically the MACD is still in negative territory, as well as the stochastic, which should limit any advances for this week, with the resistance being now capped still around 74.55 as minor, and firmer above where the bear camp is likely to be holding at 74.95. For those that are looking for a further break to the downside, well, beneath 73.60 would bring in a potential fall of 100 to 200 points and set a target of 71.60.80 and reassess from there. Well, the Euro bulls have continued to build a bullish case against its rival of the US dollar, and now reaches a fresh 6-month high of 110.14 on Friday. Now, with the outlook for this week, firstly, with the French election, the market is slowly firming up towards a potential target of 110.60.70. Now, from the election on Sunday, the fate of the EU and also the Euro now hangs to the outcome, as Emmanuel Macron is projected to be the new president from Sunday's French election, with the figures coming out for Macron ahead at 65.5% to 34.5% for Marine Le Pen. So what does this mean for the market? Well, I still feel that we are in overbought territory, but the concerns are is the US dollar has broken down slightly on an index terms. Now, the US dollar index measures the greenback strength against a trade-weighted basket of 6 major currencies. So if that continues, then we could see a move up towards 110.60.70. Beyond there, we'd see a stretch towards 111.20. I'm not overly confident that this bull run will sustain, and we could see eventually a pullback with the immediate support holding at 109.40, and then beneath that could bring in a target of 108.15.25. Well, the dollar yen, since rising above the 113 handle last week, did clip a high of 113.03 before pulling back to a low on Friday of 112.08. Now, for the start of today, the market is pressuring this upside resistance of 112.80 to 113.10. And if we do get a break above there, then this will give further scope up towards 113.90 to 114.30 and reassess from there. Support on the day still comes in at 112.10, and beneath there, further support at 111.45.65. Well, the couple of things to look at for sterling, mainly for one, is the fact that there is divergence there. Now, divergence is when price goes up and the indicator is going down. And as you can see here, we don't have it from the stochastic, but we do have it from the histogram. So I'm keeping a very close watch in case this market turns out to be a bull trap. Now, a bull trap, in terms, is a situation where the market trader enters a long position near the top of an uptrend. And you can see here, this is clearly an uptrend. Now, the market is may unexpectedly reverse So the long trader begins to sell out their long positions as downward momentum increases, which is from the MACD, and selling emerges as longs bow. So from a long trade, I do heed caution in terms in case this market does reject anywhere from 129.85.95 to 130.60, and we could be looking back towards 128.90 to 128.20.25. Well, the gold story still pressing that support at 12.24 after two challenges at 26 have failed. I am a little bit cautious from the short side. The reason behind that is that gold has a tendency to bounce quite in a sizable rally. So for those that are looking for lower levels to take profit, they should protect their positions by lowering their stop loss. Now, that being said, I still can't discount a challenge to 12.16 if we do see a break of 24 for the next 24 to 48 hours. And if we do see that, we could see a very strong rejection from that 16 level through 24 and then up towards 41, which may represent a new sell strategy. So we do need to see confirmation to the downside to support any further bearishness. Otherwise, a recovery is not too far away. And also silver, well, the downtrend comes in still around $16.70-75, and that's at the moment respecting this new support that's holding around $16 figure 5. In light of the stochastic and also possibly a reversal now in the MACD histogram, could actually see the market look back towards the top side with the immediate resistance coming in now at $16.55 and maybe towards that $16.70-75, could see a rejection from there and then see a re-challenge to the downside. But I feel now the market has found a potential base from that $16 handle, and let's see how it plays out in the next 24 hours. So that's a wrap for today. Thank you very much for joining me, and I hope you have a great day ahead.